Alrighty, traders, good afternoon, good morning, good evening, and welcome to the AAA session here. My name is Gary Fichardt, and I've got Chris and Tyson with me today, like we do every Monday. We go ahead and take a look at the opportunities that are presenting themselves right now. We're going to look at some currency pairs. I know that we've got a couple of currency pairs that we each want to go ahead and discuss and chat about this afternoon. Just a reminder to everyone, we do have a chat running. So if you want to go ahead and and I want to make sure that this stream is working. It should be working right now. Just want to double check here on my side. We do have a chat running. If you have any questions regarding the chat, please go ahead and take a look at the chat. Just give me 1 second while I just make sure everything is working on this end. And I'm going to go ahead and just do a quick refresh here. And make sure it is coming through. All right, good. Yeah, it looks like it is coming through live. Okay, fantastic. Well, just another reminder, we've got a chat running right now. If you have any questions for both for all three of us, Chris, Tyson, myself, go ahead and make sure that you post that inside the chat. We'll go ahead and address those questions as they come through. Now, without further ado, let's go ahead and get the legal stuff out of the way, and then we'll go ahead and introduce to you the panel and what we're going to be doing today and what currency pairs we're going to be following as well. So let's go ahead and do that right now. Alrighty, well, thank you very much for returning back here with me, Chris Tyson, and let's go ahead and take a look and see what's going on in the market. I know you guys have got a lot to talk about what's going on with the currencies this week, and you've got a couple of pairs that you got your eye on. I know, Chris, you're doing a couple of scalp trades on one of the pairs that you can go ahead and talk about today as well, but also looking for a long-term target as the market breaks out of this range. Tyson, you've got a couple of things you want to go ahead and share as well, and take a look at some trading opportunities. I know I've got a bunch of pairs. I'm a little disappointed in some of them, guys, by the way, guys. But I'm also excited. I'm excited about the Euro JPY where it's set up right now. I know the Aussie JPY is also an opportunity. In fact, all the Aussie crosses I'm going to be taking a look at as well and see how the Aussies are shaping up as well. So let's go ahead and get started. Tyson, I'm going to start off with you. How you doing, buddy?
I'm doing good. Yeah, we're going to focus a lot on currencies today, but I do want to give everybody a quick update because this is going to show the power of understanding options. We talked about SPAC, SPAQ 2 weeks ago, 2 weeks ago today. And 2 weeks ago, the stock was sitting at about $16, $17. It's sitting at 14 now. Tyson, it's down. If you used options, it's not. You could have sold that Jade Lizard spread for $4.50. The spread is now trading at $4. How is that possible? That was a bullish trade because the volatility was so high 2 weeks ago and we had what's called time decay. So we're talking about a bullish trade on a stock that went down 15%, yet still made money because of decay and options. It's knowing what you're doing. You can still be wrong on direction, but make a lot of money. And this was one of those trades that was a trade that you hear the idea of making money up, down, or sideways. That's exactly what this trade is doing. Whether the market goes up, whether it goes sideways, or even if it goes down, I make money as long as it doesn't just tank down, like I said 2 weeks ago. So it's been a great trade, and I think it's going to continue to pay off even more if we kind of create a floor and rally up a little bit. But even with the stock market or the stock coming down a little bit, it's still up. So that's been really fun. And it's actually a great lesson. Maybe next week we can go into a little bit of more details on a lesson on how did this bullish trade make money when the market when it fell 15%. It'll be a good good lesson to learn. But yeah, things are well. Gary and Chris, last week was a great trade. Great trading week. Posted a lot of really good trades on my Facebook page. I've been saying the words "follow the formula" a lot to traders, and it's just following the formula. And I love the trade that Chris has today because it's one of those follow the formula type of trades, Chris. And if you're disciplined to just stick to the rules and stick to what you've been doing, you're making a lot of money and generating a lot of income.
Absolutely. Yes, and you both have been doing absolutely killer this last couple of months. I know I've been doing killer last month and looking forward to a great October. But we've got a lot of things coming up. We know we have the elections. President Trump was positive last week with the COVID-19. He's now being released from the hospital apparently today. So things have been moving. The market didn't move as much on Friday, but and we're not seeing a lot of movement out of the market based on the dollar index movement this week. We did see some downside movement in the stock market though on Friday, but I haven't actually taken a look at today's trading. Is the stock market up or down today, Chris?
Up. We gapped higher. Futures was positive on the morning. We're looking at, the markets are essentially looking at a potential Biden victory in case, Trump's health continues to deteriorate. There's also this potential emergency stimulus hope after everything's been expired. We had lackluster job report last week, actually. Friday was non-farm payroll for October 2nd. So the job report came in at 660,000 versus a forecast at 800K. The unemployment rate went down from 8.2 to 7.9, but that's misleading because the job market actually lost 1.1 million workers. So if you were reading any newsletters, I follow Robinhood. That's one of my brokerage accounts for stocks. We had 1.1 million people leave the labor force, and about 825,000 of them were women. Why is that? Because we have school starting and somebody's staying at home to teach their kids and go to virtual learning. So, as kids are going back to school, but not in school, like physically not in school, somebody's got to stay home with them. So we've got somebody going back to work. Women have decided to leave the workforce. About 75% of those, leaving the labor force have been females, which it's just a huge hit. So we can't look at last week's numbers as positive. It certainly shows to me like it's a slow growth, but the market's still moving ahead on optimism of maybe a Biden election or a Biden win's not that bad. Maybe a stimulus package before the election in November is not that bad, or it's coming. And so it's up again today. But I will say, as it's up, if I look at where the structure is, I'm looking at that right now. I mean, Gary, we can look at the SPY. If you want to bring up the SPY and you can look at it, you'll probably see a very classic looking crown pattern or a very classic looking flat pattern that if we get back to like 342 on the SPY, I think that to me fits the parameters of if we see resistance at 340 or 342 on the SPY, I'm looking to sell it. I don't believe that this is a buy the dip and have this rally make new highs unless it's another divergent sell the rally type move. I'm not a rational believer that these markets can keep going higher on such a small concentration of stocks. And, it's just like the reluctance to fall. We just don't really have the great data. Tyson, you mentioned the JICJED acronym. That it's like, if that's really what it's all about, and it's been like that historically, when that is the normal of that's what really matters, it's not a good picture right now. So, but I'm not calling
Gary,
the top.
can we spend time next week? Can we devote next week to a lot of stocks? Because we're setting up with what Chris is saying is so key. There's moves that I think there's going to be games played between now and over the next 3 weeks into the election. Biden's starting to surge on the betting odds. I don't know of a bullish argument that can be made on that. Maybe some manipulation early term, but we've got to talk about potential corporate earning or corporate tax rates going up, individual tax rates, what that'll do to the stock market, and how I think we can play that. Chris, I think you're 100% spot on with your levels you're looking at. But options are starting to get, I think, relatively cheap based on the event risk in the future right now. And so buying puts very soon, maybe not right now, but buying November expiration puts, December expiration puts to position for that election, I think is really smart. I think next week, I think we have some time. I think next week we should really talk about that because I think there's going to be some trades, Gary, Chris, that we could buy some puts. And these are trades that could pay off 500,000, 2,000% between now and the end of November.
Definitely.
1,000% because you could buy these puts for $1 and sell them for $10.
Yep.
Wow.
Yeah.
Wow. Well, dude, in that case, no doubt, we're going to definitely spend some time next week, but we are also going to focusing on some currency. So we'll mix it up next week, but we'll spend some time next week and dedicate at least half the time to stocks next week, so you can go ahead and put out those stocks that are definitely ones to look out for. So let's go ahead and do that. Let's jump into some currencies now this morning. This afternoon. Sorry, my bad. Chris, you were speaking about the Euro Swiss, and I'm going to go to the Euro Swiss chart and take a look at the Euro Swiss chart as you go ahead and talk. talk your plan of action on this one right here. So here is the chart. Go ahead and talk to the students and tell them what is your plan of action going to be on this particular pair right here.
Yeah, so as you can see on Gary's chart, he has that shaded red background, and that's identifying what's becoming a really nice consolidation level. Before this session started, I asked Gary and Tyson, I'm like, look, what do you guys medium term, long term on Euro Swiss? Because I'm still bullish. I want to make sure I wasn't missing anything. And we all see the Euro Swiss going in the medium term to long term back to 110.50, 110.60, possibly right around 11100. But you can see that since July, we've had that little B. You can see where Gary has the B on his chart, that rally that pushed us up into that shaded zone. We've been sideways for July to August to September. That's 3 months of price going sideways. So all I've been doing on the Euro Swiss is I've had so keep in mind, I'm still bullish on my overall position, but I've had a standing pending buy at 1.0750 for the last 3 months. And every time that order has been filled and it goes above 10800, I'm taking profit. And I take profit and it fills me again at 107.50. I take profit, fills me again at 107.50, take profit. This is now my 5th trade at 1.0750, and I'm going to continue to stay in this position. I'm going to continue to scalp it for right now between 107.50 and it's roughly around like 10800, 10810. But what we need to see for the bulls to officially break and go to our 110 level, our 110.50 level, is a daily candle must break above 1.0850. And that's really easy to see on your chart. So here's the plan. I have pending buys at 1.0750, and it's going to stay there. Every time I have 50 plus pips of profit, I'm taking profit. So I take my profit, put in another buy limit at 1.0750. If that keeps happening for the next couple of weeks, the next couple of months, that's fine. So I'm hoping that with today's candle, you can see we have a nice wick right below 1.0750. That's currently up about 38 pips. If I get to 108.50 or higher, I'm going to take my 50 plus pips of profit. I will leave another pending buy at 1.0750 and see if that gets filled again. If we have that daily candle breaking above 1.0850, I'm looking for price to go through to new levels, breaking towards 110.50, breaking towards 11100, and I will be, kind of aggressively bullish on that one. That area, by the way, for traders that are watching this, if you break above 1.0850, that would be a great time to be long with a system, an automated strategy. You can turn on a robot to buy only. You can trade right trader max. You could trade trendsetter, bull and bear max, momentum breakout max, any solid and fairly aggressive trend system that's precise enough to get in on some of those smaller time frames. That gives you about 200 pips of direction. And so if you turn that on with a buy only bias, you can be pretty aggressive. Try to get 2, 3, 5 trades running and just, maybe scalp it for 30 to 40 pips with a surplus, or maybe just let it run and add positions and build it up as it runs up to that 110.50 area. So right now we're trading the range, as Gary has noted on the chart. Once we break above 108.50, I'm aggressively bullish above that level to the open space and having that thing go towards 110.50.
All right, so let's just confirm something right here. And I'm sure a lot of students have got questions about this. What is your confirmation of the break here? Is it going to be a full candle above that? Is it going to be a few candles above that? What are you confirming as a breakout?
Yep. So my breakout is going to be a daily candle closing above 1.08. On your chart there, 1.0840 would be fine. To me, the cleaner level is 1.0850. So I want to see the body of a candle closing above exactly, just like you have it drawn there, Gary. If it closes above there, that looks great.
Perfect. And does it have to be a certain amount of pips above the level of resistance here?
It's the body. I just want, as long as we don't have, see how, if you look at that spike up, we had a spike around like 108.70. That was a wick, right? So it's the daily close. If the daily body closes higher, I'm bullish and I'll stay with it.
All right.
Yep.
And then you're going to use an automation to go ahead and trade that. You just deploy your automation in that direction.
Exactly. And in addition to me maintaining the positions I've been holding from my discretionary trades, I will be deploying systems that are buy only, and I'll trade that bullish direction.
Okay, good. Just a quick response to a couple of the traders in the room right here regarding the audio. I've been noticed that everyone's saying that the audio for Chris and Tyson are a little lower than mine. Mine seems to be higher. What I'm not going to do is I'm not going to go ahead and play around with the audio right now. I'm going to go ahead and stick with the current setup that we have. and then hopefully at the next session we'll have that all taken care of. So I'll go figure out exactly what the audio issue is. I just don't want to go ahead and mess around with what we currently have right now. So I'll fix whatever we have. We'll do it next week. So I do appreciate everyone pointing that out, that the audio isn't quite where it needs to be, and we'll go ahead and sort that out. So, all right, so let's go ahead and continue. Okay, so that's the Euro Swiss franc. Euro Swiss franc for a breakout, daily breakout, then deploying automation in that direction. Sounds fair. Looks like a great trading opportunity, especially if you're using automation, because if the automation doesn't pick up trades, that means the price is not going to stay above that level. And I think with most of the EAs, most of the trading robots that we have, Chris, you can actually set a level that you want to go ahead and trade above. So you can say, I only want to buy above this level, and if the market moves below it, it's not going to put in any trades in, right?
Right, correct.
Okay, cool. All right, good stuff. Tyson, what do we got on the agenda for trades this week?
Yeah, first of all, I love that idea with the Euro Swiss from Chris. I think it's a great idea. I'm interested kind of into seeing. You were going to talk about some Euro Yen trade, and I'm kind of interested in seeing if you're going to be selling, because if you are, and you were talking about some Aussie trades too, because if you're going to be selling the Euro Yen, then I might talk about an Aussie trade instead of, because I like the Euro Aussie long. But I also don't want to trade against the currency king. I don't want to trade the euro long when the currency king himself is going euro short in the yen. So what are you thinking on the euro yen first?
All right, well, good. Let's go throw out the euro yen right here. So this is what I'm thinking on the euro yen. Euro yen at the moment right now is what I've been looking for. We spoke about a couple of weeks ago. I said 120, 124.50 is a good level to start selling the euro yen. We may go up a little bit as the price, and we all know, right? We have these little whippy-lashy type of movements above there just to tease us a little bit. But anything, if we stay below 124.50, I'm selling euro yen down to around about I think it's 121.50 right here. So 124.50, I'm going to look to sell. I actually am going to go ahead and do the same as I'm going to do the same as Chris. I'm going to go ahead and deploy an automated EA. I have two types of trading accounts. One, I go ahead and trade a little aggressive, where I go ahead and trade multiple entry points. And when I go ahead and place multiple entry points, what I'm really doing here is I'm saying that my stop loss is going to be about 1,000 pips away. And in this case now, it's not quite 1,000 that I need to before I make a decision. But the reason why I put my stop loss away is because if price moves up higher right here, and we start taking out some highs, I want to be able to add in positions right here without being stopped out and not risking too much on the trade, to be able to get the heck out of Dodge as we get a correction move and then price moving back up again. So I've got two ways to trade this, and I have two different trading accounts to do this. One account will be adding on positions right here and starting to sell right here, making sure that if price goes up around about 126.70, I can go ahead and add more here so I can get out at a break-even point and make a bit of money on this trade, and then get the heck out of Dodge, because this is going to go ahead and move back up north. Now, the next option that I have is trading with automation, just like Chris is going to be doing right here. As we stay below 124.50, this is the level right here. If we stay below here, I'm going to use a 1 hour time frame. I may even go down to a 15-minute time frame, and I'll show you how that looks like. Check this out. If I go to a 15-minute time frame right here, it's going to give me a little bit of an earlier entry point, but what I want to do is only trade below 124.50. Now, if price stays above 124.50, then obviously all bets are off. But if it goes in and trades below 124.50, and then gives me the signals based on my right trader max indicator, I'm going to go ahead and start entering the trades. So I'm looking for that. So I'm really giving us a two-way option right here on this trade. I'm saying I'm really interested in trading below 124.50 and trading it south. But also at the same time, I'm saying, hey, if it doesn't work out, I have a second plan of action, and that is to add more positions in a little higher up as price goes higher, to be able to get out of the trade, because then I'm looking at this trade to be non and void, and then we're possibly going to break out to the upside, which means I have to go in and compress my chart up a little bit right here. And this whole structure that I have in place right here, showing this wave structure right here, because this wave structure tells me that price could go all the way back down to 111. But if this wave structure completely breaks out, then we're chasing after the highs up here. Then you can say Then you can see Euro JPY going up to, let's say, 134 or 133 right here, and then 136 up here at the top, 137, 138 as it goes up higher. So there's definitely room for the upside, but if we stay below 124, we're heading down to about 111.
Yeah, no, I like it. And you know what? With that being said, I think I want to kind of change up the currency I was going to talk about. And I think there's a lot of students that are wondering what the update on this, because I like the Euro Aussie long, but I agree with everything you're saying on the Euro Yen potentially sell side. So if that's the case, think about this. If I like the Euro Aussie long, but I like what you just said about the Euro Yen short, then I should be looking at the Aussie Yen short opportunity. That's maybe the best of them all. But I'm going to kind of throw a curveball at you, and I'm going to say Aussie Dollar. And it's one that we talked about for months and months, one we talked about for a long time. It is structurally, it's finally started to move in the direction we've been looking. It's finally starting to roll over. I like the patterns that are setting up right now. We're in levels of daily levels of supply. This move over the course of the last week or so is not surprising to me. It's kind of a retracement in the start of this reversal pattern to the downside. And so I like the Aussie dollar. The way that I have it structured is I'm looking ultimately for a push down towards 65 to 66. That's ultimately my target, my longer term target. And it's not going to get that. It's not going to go in a straight line down there, but I do like ultimately for it to get down there. We have some demand levels sitting down there. And I don't mind looking for opportunities to sell right in this area, but to be conservative, and I set this up in my trading room on Friday, to be conservative, there's two key entry points that I really like. One, if price rallies up to 72.81, we have a really nice daily level of supply sitting there. So 72.81, I really like selling there. So if price rallies up, I'm going to sell at that level. If price doesn't rally up there and it starts to fall and it proves itself to me, then I'm going to sell on a break below Friday's low. So the nice thing about setting up a trade like that is I've kind of bracketed off my entry point. I'm going to get involved really no matter what. Price rallies up into those supply levels, I want to sell at 72.81. Price falls, breaks below 71.30, which is Friday's low. I want to sell there. My ultimate target's down to, I have a target in my trading room. I said 66.50, or I'm sorry, 65.50. I think that's a fair target. We'll have to manage it on the way down there because it's not going to go in a straight line. And I believe that we could structure this trade, use all sorts of strategies, and have the short side play off as long as price stays below 74.15. So to kind of wrap all this up, or to kind of button this up, I'm looking to sell down to about 65.50 at current price or around current price as long as price stays below 74.15. That's really the idea of the trade.
Okay. Now let's go ahead and connect that with the dollar index, right? What we're anticipating, because this is obviously there's a lot of influence coming up with the dollar based on what's happening with the U.S. elections, right? Yep. So U.S. elections is going to influence the movement of this the Aussie U.S. dollar pair, just like the Euro JPY, right? There's definitely going to be influence with JPY based on U.S. influence. So let's take a look at the dollar index. So you're expecting a stronger dollar. And if you look over here on the dollar, this is sitting up. It looks very similar, but in the opposite direction of the Aussie US dollar, right? Yep. You've seen the dollar index sitting over here at support here, looking for a bit of a rally to the upside. So we could see rally in the dollar, and if we do see rally in the dollar based on this technical setup right here, then that should push the Aussie dollar bearish to the downside. So that definitely lines up, and you got good correlation between the two. What is your and I guess let's take a quick view on the U.S. elections, right? What can we anticipate now? We're going to be talking a little bit more about the U.S. election because we've got an event coming up in the what's the dates? The 2nd November, 3rd November,
and November 2nd, 3rd, and run through the 4th, and we've also
correct, yeah.
We've also kind of opened up everybody's schedule if we need to add some more sessions, because it's going to be such a fun event and such a fun time to be trading live with the students. And more information for everybody who's watching. More information is going to be coming, but it's going to be really fun. It's going to be with the three of us, and we might trade for 2 or 3 hours. We might trade for 13 hours. We don't know, depending on what the opportunities that come. So it'll be really fun. But my viewpoint is this. It's the U.S. and really the dollar in general are kind of in an interesting scenario. It's just like the whole worldwide economy. It's in an interesting scenario because rates are low. Yet we're not seeing, or starting to see actually recently over the course of the last few months, but we haven't seen over the last couple of years, we haven't seen any inflation. But we're actually starting to see inflation now, and you're really starting to see it in large assets like real estate and lumber prices and different things like that are really starting to show signs of inflation. And if we continue to get signs of inflation, regardless of who is elected or who wins, the Fed's going to have to come in and try to combat that inflation because that's the one concern. Where's all this money going to go? And eventually, the idea is all this money finds its way into the system, which then prices of goods and services have to go up. Well, that hasn't happened yet. What has happened over the last few years is the savings rate of Americans has went up, corporate buybacks have went up, dividend yields have went up and all that. And so the money hasn't necessarily found its way back into the system, into buying goods and services. It is now. So it'll be interesting. So I don't really have a clear-cut idea, fundamentally speaking, on if Biden wins, this is going to happen. If Trump wins, this is going to happen. But what I do know is I think the dollar is oversold at this point, technically speaking, and I think it's due for a bounce. And I think we're starting to see that in bond rates and yields, and I think we're starting to see that technically in the charts. And so I think I'll have more of an idea or a clearer picture on what I can expect. Because I'm planning on going into like the tax plans with Trump, the tax plans with Biden, comparing those and what does that mean for the consumer and stuff like that. So I think I'll get a better idea and a better game plan when we get closer to the election. But for now, I'm just going to trade what the charts are telling me.
Yeah. Chris is smiling right there. It seems a lot of stuff coming down, but and I think I agree with Tyson. You know, there's not a sure way where the market's going to move. It's certainly going to be based on the data, based on what happens, but we cannot for right now say, hey, this is how it's going to move. And I'm going to be honest with you, I'm already starting to set up, I'm already starting to look at all the systems that I'm using to see which system is going to be the best system for me to use during the election period, because I want to take a piece of the movement, right? I don't want to be just a bystander watching and seeing what's going on in the market, but I want to participate. But I also know that through this type of movement, the market could be extremely volatile. Spreads are going to be wide. We're going to see even margins increases at that time. So we know that we have to be very cautious during that time of trading. But at the same time, we can still trade it. We just have to know exactly what type of environment we're trading and adjust in that environment. And so, Chris, you smiling there. What is your thought on that?
Well, I think that the best way for us to get through this election, get through the month of October, October has about a 25 to 50% more volatility on record than any other month during the year. So what Tyson was saying, actually, when Tyson said lumber, I actually looked up. We knew this. Lumber was up about 500% this year. 500%, and we just had this massive drop on it. In fact, this last week, we had about that rate cut in half. So there's been a huge price gap in lumber futures. But it's like that's been the most noticeable thing. I live in a neighborhood that is still doing manufactured builds, and so it's we have new builds. We still have another probably 20 lots available in this neighborhood, and because of that, like their base price increased. Not a ton, but about 10%. That was strictly because of those lumber increases. So, it's funny that it's like we still build wooden homes. The amount of square footage that takes for lumber to go into a house that is still, not tornado proof or not flood proof or not termite proof. You'd think we'd find other means to build homes, but nevertheless, that obviously is a great point on inflation. And if you could ask anybody that goes to the grocery store, we certainly think that the weaker dollar that we've been noticing for years, and going to the grocery store, it's like, how do you go to Walmart or Costco or Whole Foods, and how are you spending $100 to $200 to $300, $400 every single week or every couple of weeks just to get your staples? People feel it. Back to the election question. look, the three of us are going to be together, and we're going to have this power event, right? This peak performance, and it's all around the election. We want everybody that's in this session right now to tell everyone that you possibly know to join this session, because look, we truly don't know what's going to happen. If we had a crystal ball, we would tell you exactly what we're doing with our own personal trading, but we don't. But you know what we're going to do is we're going to figure out how to trade it, and we're going to be profitable. And whether that's short term to react in and around the election, whether that's to brace for all the volatility right now, or that's to let the dust settle after the election and see how we trade it to rally up the rest of the year. I mean, historically, the markets do some pretty amazing things. Even a month after the election, over the last 80 years, the S&P 500 has found a way to still show positive gains before the year's over. So even though we might have a Biden win, and that could be terrible for the markets, and everyone's going to be taking profit and tax loss harvesting and taking gains, fine. But that may not make the market go down. So we have to be prepared for this endless resistant rally that just doesn't want to fall. And if that's what we deal with for the next 2 months, then let's trade it and be profitable. But let's be very protective of the profits we have. Let's take advantage of the volatility we get for this month. And I just think we've been saying this for weeks now, that we have to be flexible. We have to not have this crazy bias and be so committed to a single direction that when we're wrong, we're either shocked, or we have, deer in the headlights look where we don't know what to do, or we're so overcommitted that our exposure is going to either make or break us. I mean, I know that I'm sitting in a lot of cash and a lot of margin ready to trade. And I also have positions that I'm already committed to that I'm willing to stay in. But I've been scaling back. I've been waiting to leave some money on the sidelines where I can apply it where I find these great setups. And that's what we're having all around us, is we have a lot of great setups that we need to take advantage of. But to just say Trump with COVID, what's that mean for the election? I don't know. We don't know. It's been 3 days, right? We have a month with elections starting and ballots being counted now. We know that this is like a time we've probably never seen election-wise, with volatility that can come and go in a blink of an eye. We just have to be prepared. And so I would say this to anybody out there: there's no better way to be prepared than to join us and be with us and let us help navigate, whatever murky and crazy waters there are. But I think we can find a way to be profitable, and we can make a lot of traders happier by having a great game plan, whether we're trading stocks or trading Forex. We'll find a way to get the job done. So I would say that's the best part, is just spend the time with us. Be in these sessions, hit this stupid thumbs up and this like button. Get us some love on this YouTube channel. And let's do this again. Let's keep doing this every week with Ask an Analyst. Let's do our election peak performance, and let's have a blast. It's going to be a lot of fun. So you're in the right place. And I know all three of us, when we do these sessions, we get one another excited, and we're always willing to trade with an open mind and trade with open eyes, and just be ready for whatever opportunities around the corner.
Yeah, Chris, one thing I want to just piggyback on that real fast is that I think that no matter whatever we're going into with the election, it's going to be so important to surround yourself with experts. Yeah. Because I believe the manipulation is going to be off the charts. And I think if we get a rally into the election and Biden wins, I wouldn't be surprised if it continues to rally, but it's going to be one of those scenarios that whatever happens a month before and a month after is not going to hold. It's gonna be kind of that, I call it the turkey trade. And if we get this big massive sell-off to prepare for Biden into the election, don't be surprised if we don't get a snapback rally if Biden wins. All these sorts of things.
Yep.
Right. And the same thing with Trump. We get this big massive rally into it, look for some potential profit taking. We get this big sell-off into it. I think the bottom line is this: I think we need to be prepared to do the opposite of what the talking heads.
Agree.
Us not being the talking heads, right?
Yeah.
Us being the other side of the talking heads on the media.
Look, we're traders. We're not talking heads. We're traders.
Booyah type of guys.
Yeah.
Do the opposite of what some of them are saying.
Yeah.
Right.
We're traders.
And I think
we're not talking heads.
Yeah, and I think to add to that, guys, I think the most important thing is, and I think I definitely concur with you guys are saying with regards to coming in there with an open mind, right? Coming there saying, hey, I'm not going to pick a direction and stick to it and be married to that trade, but coming there with an open mind saying, hey, listen, this market could go anywhere, but I'm going to come in there with a plan, and my plan is going to say, this is what I'm going to do, and if things turn around, this is my alternative, right? And I'm already starting to build up sort of a game plan as I start heading towards this date. We're less than a month away from it. So we are going to start seeing the volatility starting to pick up. We're going to start seeing the markets starting to get a little bit nervous as things are getting closer and closer. We're starting to see, of course, the polls, how the polls are being affected by who's winning, who's losing. All of that stuff is going to come into play over the next few weeks. So as we start heading into the election period, we know that there's going to be some good opportunities. Now, I'm already starting to look at short-term opportunities. Nothing's long-term for me right now. So even though I'm looking at the Euro JPY dropping back down to 1100 or 111, I'm not saying that I'm going to hold on to a trade all the way down to that level. I'm going to look for opportunities and take short-term opportunities as we move it into these uncertain periods, right? But the most important thing right here is when you're in the midst of things, make sure that you are open to making quick decisions to change whatever you decide on initially. So, and I'm not saying just based on emotions. I'm saying based on technicals. So if the technicals change, if things change, like Chris mentioned something about he's waiting for a breakout on the Euro Swiss. If it breaks out the Euro Swiss and closes out with a big bullish daily candle, he's going to be looking to buy long with his EA. I'm telling you right now, if that bullish candle closes out on the daily, starts taking off, but then turns around and heads back down south inside the consolidation, Chris is going to change his mind about what he's doing. He's not going to still hold on to trades and start thinking about sticking to that trading plan. He may start thinking about other alternatives. And so coming to the table with a game plan is important. But what's more important is not being married to a trade. So when you start seeing the technicals change direction, you have to start making alternative decisions. Because if you don't, you may be stuck in something that you don't want to be in, and that could keep your equity, especially with, of course, margins increases and all that other good stuff, may keep you into trades and keep your equity tied up for a long period of time, so you can't get into other trades. So be very quick to make those decisions. So it's going to be an interesting time, guys. Look, I'm looking forward to it, and just like Tyson Chris mentioned, the 2nd of November, 3rd of November, 4th of November, and we're going to be adding some bonus sessions too as well. It's going to be a really good time to be with us in a trading environment as we go ahead and look for these trading opportunities. Be there, share this video, like the video. If you haven't subscribed to this YouTube channel, subscribe to the YouTube channel. Let's go ahead and make sure that we get this message across the board. So,
by the way, just real fast on that too, more information's coming, but these are going to be sessions that are going to be we're going to try to do them during the most important times, like during when the polls come out, when the results come out, when things are going to be moving. We want to be on these sessions with students. We hoping tens of thousands of people and trading live in front of them. And so it's going to be great. It's not going to be one of those, hey, we'll do it after the fact or we'll do it before. We want to do it right in the middle of it. So it's going to be really fun.
We're going to have to start calling ourselves the Three Musketeers. All right?
Yeah.
Or was there a fourth one? I don't know. I still remember the Three Musketeers. Listen, guys. Well, just before we cut off, just before we end of this session, I want to go ahead and get a quick feel on everyone, how they've been doing the last month. Because we've been doing these sessions, we just want to get some feedback from you. Go ahead and type up in the chat right now, how have you performed last month? And I don't want to know week to week, but just last month alone. How did you do last month? How are you doing this year in performing? And if you want to throw out pips there, that's fine. If you want to throw out percentages, that's also cool. Just go ahead and let us know. Type them in the chat right here. How is everyone doing, and what type of performance that you guys have received over the last month or so? So go ahead and type that up. And the reason why I'm asking, because this information is good for us to know how our audience, how they're performing, and if there's anyone struggling with certain things, we want to go ahead and identify that and then help those students to be able to make better trading opportunities. So let's go ahead and take a look at let's go ahead and do a close off right here. Tyson, if you can go ahead and just do a couple of words as we close off for today and move into the next week's session.
Yeah, Michael just typed in about 5,800 pips. I was just going to say, you know what? It doesn't surprise me because, you know, Michael is one of those students. He's involved. He's involved with me and Chris and Gary. I was going to say that anybody who's in the Money Flow trading room should be crushing it. Anybody who's with Chris and Gary in our trading rooms, you guys should be crushing it. We don't make money every single day, every single week. Sometimes even on a monthly basis, we have losing months. But we know what we're doing, and we know how to teach. The best thing about this business, I say this all the time, the best thing about this business is what we do is transferable. And so if I have a skill that makes money and generates income, it's that skill that I can teach others to do. And over time, the idea is get to a point where you don't need me anymore. And that's an awesome point because, and that's good for all of us, because the more students that get to a point that don't need us, it actually helps us grow, because then they're out telling friends and family, and it helps us grow our trading rooms also. So it's that success begets success type of plan, which is awesome. So great job to those that are making money. Denise, doesn't surprise me, 23% for the year. Josh was 77% in the last 3 months. Great job, guys. Keep it up. I really enjoy these sessions. It's always nice to be here.
Definitely.
Chris.
Yeah, I'll piggyback on that. I mean, obviously the feedback keeps coming in. Thanks a lot for turning out today. This is probably, one time that we can ask, look, we've been doing these AAA sessions for a while. Every time that we have these meetings, with our team, we keep saying, like, we need more eyes on this stuff. We know that this information, and we're not just saying it because we love to hear ourselves talk. We know that this information that you're getting in these sessions right here that are absolutely free is not coming from everywhere else. We know this information of, just multi markets and different asset classes, and having having experts like us that we're in the trenches trading right there with you. So we're not like some high level, like, oh, we'll just do it after the fact or in hindsight, or look at how good this was. It's like we're in there taking money with our live accounts too. So that's why we have trading rooms, and that's why we love to see the results you're typing in are awesome. And if you're following along, and even who was it? Who said, Jeremy, for example, says, I'm still my second month learning. Jeremy, you're absolutely in the right spot. Like, learn with us and learn faster. Your lessons and the ability to apply and learn by doing, they happen so much faster when you're in these sessions and in these trading rooms with us. And that's the best way to do it moving forward. So we love everybody that's here, appreciate everybody that's here. We're all excited about being able to navigate whatever the markets throw at us over the next month, or maybe the next 2 months. I think it's going to be a crazy Q4, and I am looking forward to it. I think there's no excuses to not get the job done. It might be some surprises. There might be some stuff we were seeing unexpectedly, but we will paint every possible scenario, every possible picture, and we'll focus on all the big levels, because we know that, look, the markets still, at the end of the day, go up, down, or sideways. It's either fast or slow. It's whatever the catalyst is, but the market's still going to do the same thing it's done for decades, which is move in some direction. And if it's not moving, we're trading the range. If it's finally moving, we're trading breakouts, and we follow along. We get those, those big expansion moves and breakouts. And but I'm telling you what, it's going to give us something, and we're ready to take profits from it. So looking forward to it.
Absolutely. Well, great. Thank you, guys. Appreciate it. And I'll just go ahead and add on that and just say, hey, guys, listen, check out for information coming across the board around the U.S. election. It's going to be Tyson, myself, and Chris talking about trading opportunities and looking at what we're going to be doing during that period. Remember, it's not just placing trades, but also how we go through the process of how we identify these trading opportunities. And whether we stand aside or whether we trade, that'll be decisions at the time based on the conditions that we're in, the environment that we're in. So you're going to learn a lot from that. It's going to be a great 3 days, and plus more added bonuses to that session. Make sure you check out for those details. If I haven't mentioned it, I actually have mentioned it, go ahead and push the like button, subscribe to the channel, and we'll see everyone back again next week. And don't forget about the currency pairs that we just spoke about, right? The Euro Swiss, Aussie US dollar, Euro JPY. Check out those details that we just spoke about right here. We're going to follow up next week. And Chris and Tyson, remember that. We're going to follow up next week and continue this conversation around those pairs and add in additional stuff around stocks as well. That Tyson is absolutely, he is the stocks king right there. And when it comes to these type of trading opportunities, you may want to pay attention to. He says 1,000% opportunity, 5,000% opportunity. These are huge. You may want to pay attention to that. So we'll see you guys next week. All right. So from myself and Chris and Tyson, you guys have an awesome week. We'll see you next time.